For the last time, we take about market structure and how we can identify our market profile, if it's bullish or bearish or in consolidation phase, and how we trade in these three markets. Everything was clear in the last lesson.
Yeah, so far, okay.
Okay, so our lesson today about market structure shift, how to identify the fake MSS, how to identify the true MSS, and how we can take it the MSS for insights that we can start on bullish order flow or bearish order flow or market maker buy model or market maker sell model. So we have the fake MSS like it's here. So here we have a high and a low and lower high, then lower low, then price shift the structure to the upside. Okay, but let's say you see the you saw the MSS and you can't enter the trade blindly, or if you don't have another insights with it. So here we have the previous daily low that is still not taken out. Price make fake MSS to the upside, take the short term high here, then it go up to the 15-minute fair value gap, then take the internal fair value gap, then go down to attack the sell side liquidity below the previous daily low. So here we have a fake MSS. Why? Because the price go from here to the premium to the 15-minute fair value gap to go down to the previous daily high. So if you open buy from here, you will take a stop. So the algorithm, the IPTA, was engineering liquidity above this high and above this low. The price go up, take the sellers out, and take the buy stops. That when price break this level, some people will put buy stops here and their stop below here, and price go down. Take uh, take the stops out, take the sellers and take the buyers, and of course here also. Okay, so if we have a higher time frame bearish order flow, let's say you are watching the 4 hour, we have a bearish movement or bearish order flow, higher lower highs and lower lows. So you must follow the 4 hour order flow. Okay, so if the 15-minute go up, so if not from not after taking sell side liquidity or not after reaching some PD array, fair value gap on the daily, on the 4 hour order block. Okay, so price shift to the make fake MSS to the upside to go to the premium levels on the 15-minute fair value gap, then go down with the higher time frame order flow to take the sell side liquidity. Everything is clear about the fake MSS. I will explain it on the chart. Okay, here we have
Yes. Yep.
any question about it?
No, okay, carry on.
Okay, so here we have the true MSS or the uh, not for the true MSS, the true market structure shift. Okay, price go down, take the previous daily low or previous weekly low or high time frame liquidity pool. Then we have MSS. Okay, as I was explained to you in the last lesson. You must watch it. Okay, I told you on the from our daily level, we must see 15-minute MSS from 4 hour level. sorry, from 4-hour level, we must see 15-minute MSS. From daily level, we must see 1 hour MSS. From 15 minute, we must see 1 minute MSS. So let's say you are watching the price on three time frames: the daily, the 4-hour, the 15-minute. Okay, so you have your levels, you have your point of interest, everything, the BT rate that price can make a market structure shift from it, or the liquidity that price can attack. So you must use this level to what? To attack the draw on liquidity. The most important thing is the draw on liquidity. So price here take this previous daily low, go down to the, let's say that the daily order block, and make a market structure shift on the 1 hour. Then the price must what? After making MSS, it must retrace to the discount areas of the MSS. So let's say we have a 1 hour fair value gap in the discount areas, and the price go down to it. Okay, we mark our draw on liquidity after the MSS, that is, let's say, previous daily high. So price go down to the discount areas, to the 1 hour fair value gap. We must see 5-minute market structure shift, right? So from here, we wait 5-minute market structure shift and go up with the previous daily. Let's say we take this high, okay, then price can retrace to the discount. Also, we can take another trade. Okay, if you are a short-term trader, you don't need to hold the trade for 1,000 pips and 2,000 pips and 500 pips. You just uh, identify your order flow, identify your trend, and take the trades with the trend or with the order flow, or let's say price make MSS here. Okay, so we can predict that we can take a trade from here to the discount areas also. Okay, this in the bullish scenario, or the market maker buy model to take the draw on liquidity that is previous daily high. So this is true MSS. Price or algorithm use it. Okay, what is this I do here? This drawing, I was explaining it to my Arabic students. Okay, so okay. So here we have the MSS that happened on the SMT. Okay, that is a true MSS also. So let's say we have a price going up, making higher lows and higher highs, like here. Okay, then price make this move in the Dow. Okay, but in the Nasdaq, let's say Nasdaq or the Dow, or if you are trading the forex pairs, GBP USD, Euro USD, let's say this is GBP USD and this is Euro USD. Price go down like here, go down, then don't make higher high, but make lower high, then price make a market structure shift. Can we take this market structure shift as a true market structure shift? Of course, this indicates to us if the SMT happened with the time, let's say, of silver bullet or the New York Open, or the time that you are training on it, and the SMT happened, so you don't distract yourself and say, no, the MSS don't have liquidity sweep, I can't enter the trade. No, you can enter the trade because there is an SMT. Okay, so here, let's say GBP USD making higher high, but Euro USD making lower high, then made the market structure shift. So this is a true market structure shift, and this indicate to us that Euro USD is weaker than GBP USD because it don't take this high. Clear? Are you with me, brother?
So if like this, which one would you take?
I will trade
GU USD or Euro USD?
euro.
The weaker one or the stronger one?
The weaker,
Euro.
yeah. Okay. You need
Or the weaker.
to enter the trade on the weaker one, not the strong one, because you are entered
Okay.
sell. Okay. So
Okay.
you can't enter with the strong one. You must enter with the weakness. And SMT is like a crack in the correlation or the crack on the codes of the algorithm. So here you are identify the footprint of the smart money. This SMT is called smart money technique. So this is a technique that smart money using it to indicate which pair will move more aggressively or more weakness on it. So let's say the SMT happened here. It can be only for taking this low. Okay, then price go down, go up after it and take the SMT. Okay, there is all all lesson about SMT I will teach you about. Okay, but here if you are trading in your time, let's say the
Okay.
London silver bullet between 3 a.m. to 4 a.m. in the New York time. Okay, and this happened on your eyes. You must watch if you are trading indices, you must uh, at least watch two correlated pairs, Nasdaq or Dow Jones. If you are trading Forex, you must watch the dollar index or the Euro USD or GBP USD and Euro USD or dollar index. These three charts must watch. Okay, you must watch to identify the SMT. SMT is very good on the time, but outside the time, it become less probable.
Okay. You use 1 minute, is it?
1 minute or 5 minutes or 15
I
minutes, the time frame you are watching the SMT on it. If it in the 15 minute, it's more powerful than the 1 minute because the low on the 15 minute here will give you more pips to here. Okay, more the range will be bigger on the weakness. Okay, I take a trade today on the gold based on the SMT. Okay, sorry, not another, based on the market structure shift. So here in the daily, uh, in the last week, I identified this daily fair value gap and say to the people in the Telegram and in the Discord, I don't know if you are follow me in the Discord. Uh, uh, I I was talking about this daily fair value gap that I want the price. Okay, I was identifying my bias or my narrative, or I am reading the price on the higher time frame key level. So this was my key level on the gold that I can't take trade from it. On the daily fair value gap, what I want to see what MSS on what time frame I must see the MSS.
1 hour.
True,
1 hour. Yeah.
true. In the 4 hour also, I have a balanced price range. Okay, so this here, look, the candles up and down, up and down. There is no fair value gaps here, but in the daily there is. But in the 4 hour, uh, this is an balanced price range. Okay.
Okay.
Look the respect to the CE of the daily fair value gap, and today look how price come up to it and rejected. Okay, so on my head, this level gold is respecting it, or it's using it for what? So in the first time, the algorithm use this level to take this sell side liquidity. True. Okay, MSS happened, then SS sell side liquidity have been taken out. On the 1 hour, We have an MSS. Okay, but this is not a very good MSS. I don't like when I see liquidity sweep. So look, when liquidity sweep happen, price how go up to the upside. Okay, taking the previous daily high. So I take a trade today on the bullish movement. Okay, I know that the price will take the previous daily high and this relative equal highs. Okay, so this is have liquidity pool above it. So I'm reading the price on the 1 hour to use lower time frame for entry. So I enter on the lower time frame today. This is my trade on the 1 minute. Let's explain to you the first trade I take here. Uh, okay, okay, where it is, where it is. Where I take it? Okay, here. So price, I was reading the price. Okay, I see that we have MSS from a 4 hour fair value gap. Price go up, retrace, consolidate, then expand, then retrace, then expansion, then retracement to the discount, then price make MSS here. Okay, you see it. This is an MSS. After what? After taking this sell side liquidity pool have that is here and digging and hitting the fair value gap and go up, make the MSS here. Okay. So I was reading the price, what doing in the 1 hour, where is the liquidity, where is my key level. So I have my key level here. Okay, I have the liquidity. I have the previous daily high, which was here and here in this areas. Okay, so price made MSS retrace. Then I open my chart in the morning. I was here. Okay, or here. So I wait for a confirmation. What is my confirmation? My confirmation is the MSS that happened here. I have high time frame bullish movement on the 1 hour. So I will follow the 1 hour order flow. Okay, price make the MSS on the 1 minute. Then displacement happened here. Okay, taking this is an order flow. Okay, this two candles price move to the upside here in this candle and close above these two candles, above the body of these two candles. So price go down, use this order block, then go up. What candle what candle is algorithm making here? So this is a proportion order block that use this order block. So this is become proportion order block. Okay, don't distract yourself. I don't know if you know about proportion order block. I will teach you about it in the future. So this was the proportion order block. I take the trade from the middle of it. Okay, on target the previous daily high and the relative equal highs and the 15-minute fair value gap. I was have 15-minute fair value gap upside and watch the price. I am watching the price, what is doing in my key level. Okay, so I have my 15-minute chart. Okay, and MSS. No, not here. Okay, uh, price go down. What happened here? Happened an MSS on the 15-minute. Okay, on the 15-minute, I have an MSS. Even if if the candle don't close below it, I don't need the candle to close below it to call it MSS. Okay, MSS can happen on the weeks also. So price make the market structure shift. This is what I was explaining to you on the true MSS. What happened? I have take out the previous daily high. I am dig to my key level. I wait for MSS. MSS happened. So this is confirmation to me. Okay. I wait. Okay. In our next lesson, I will teach you about the fair value gap, and you will be you will be knowing the fair value gap very good. So the fair value gap is not only a fair value gap, it's have many meaning. Uh, it's so powerful in my analysis. Why? Because I was have a fair value gap here, right? This is a fair value gap. This candle close below it, so it became inversion. So inversion fair value gap with MSS price dig to it, making what a breakaway gap. So on my head, price should not go up to this breakaway gap. It will use the inversion fair value gap to what? To take the sell side liquidity and the fair value gaps that is here, and maybe can go down and take the sell side liquidity also. I still have some of my position to the downside and my stop loss to my entry. Okay. So this was my session on the morning. I was reading the price, what is doing on the 15-minute and on the 1 hour. So as you can see also on, I take a trade here. Oh, okay, this is last week. No, yesterday. So this is also, let's say we have what sell side liquidity here have been taken out. So this is what a liquidity sweep. Okay, why? Because this candle take the sell side liquidity and then close above. Also, this candle takes sell side liquidity and close above. So this candle, let's say if it doesn't close above this sell side liquidity after taking out, it close downside. So my head, no, price could use this candle as an order block to take the sell side liquidity also on the downside. Okay, so I have here also, let's explain it to you. You must watching the videos, okay, that I am recording. So I take 2 trades in yesterday here, okay. In the 15-minute, this is the first candle I was talking about it, that is taking the sell side, then price go and make MSS, okay. So this is MSS, but so it's fall or it's fail? Why it's fail? Because it's outside the time. Here we don't enter the kill zone. Here we enter the kill zone. So here we enter the kill zone. Price take this low, then MSS happens. So this is the valid MSS. Why? Because we are inside the kill zone. Here we are outside the kill zone. So here the time come to us. And, watch carefully and about time. Time without price is useless, and price without time is useless. So these two things are so important. So the price, I wait for price, then I watch the price what is doing. So here we have 1, 2, 3, 4, 5, 6. Let's say here. So two. So these are to here to here. This is all a 15-minute candle. Okay, this is the liquidity sweep that I was explaining to you on the 15-minute, and this is the 1 minute to here. Okay, so this is all the 15-minute candle. What happened on it? Happened on it in the 1 minute, what? MSS. Okay, this high have been taken out, MSS happened. Uh, I don't enter here because I was sleeping. Okay, so I wait for what? For the silver bullet. Okay, so MSS happened on the kill zone. I was reading the price, MSS liquidity sweep with MSS, price generating liquidity, where the IPDA is engineering liquidity here. Okay, this high, this high, this high, this high.
Oh, equal high.
Yes, so much engineering liquidity, and what? And we are below the midnight open price. Okay, so I consider this movement to here all is as what? Judas swing. Okay, so price accumulate here and engineer liquidity above this high. MSS happened after liquidity sweep on the kill zone. Then we have the silver bullet time. Let's say you don't enter here because you are sleeping. Okay, I was sleeping, so I don't enter here. So I watch the price go up to here and say no, I don't. I will not take the trade. No, because I have confirmations. Price dig down, go down, take this short-term low to the discount to this order block. Okay, we have also inversion fair value gap here. And what happened when in the 1 minute? In the 1 minute liquidity sweep, as we was reading the price in the 15 minute, same thing happened here. After liquidity sweep, what BDRA uh, algorithm made the rejection block. Okay, so the rejection block, this is the tail of this candle, is the rejection block. Okay, so my first entry was from it.
Okay.
I have confidence that price will not go down based on the structure, and we also in the discount areas. Okay, let's see if we have a TE also on the OTE. Okay, and on the order block and in the inversion fair value gap and the breaker. So this is a strong place, strong place for BD arrays. So many BD arrays algorithm made here. So price algorithm made this rejection block. Price dig it to it. I take the first trade, and after digging in the rejection block, MSS happened to the upside. Okay, so I have another confirmation here on what? On the silver bullet time. So I can take another trade. Okay, why? Because I have a structure and I have liquidity resting above these highs. Okay, and the midnight open price, we are below the midnight open price. So price dig on this candle is an order block, and these two candle are mitigation block. Okay, so we have also a strong place for BDA raise, and we have unfair value gap. So I take it from the open price of these two candles, that is mitigation block and the order block and the fair value gap. And this was 4 to 14 risk to reward ratio, and this was 5.2 risk to reward ratio. Okay, you don't want big move of pips, and you don't want 100 pips in gold. You need what? The RR. The first lesson I teach you about. Okay, if you have a good RR
Correct.
in your trade, even if your target is 10 pips, if you have an RR to 1 to 3 and above, let's say you are your stop loss is 5 pips. Okay, and your take profit is 20 pips. So you have an RR 1 to 4. Okay. Let's say your stop loss is 20 pips and your take profit is 80 pips. So also you have 1 to 4 RR. So your loss in the two trades in the same, and and your profit in the trades the same. But the less pips is better. Why? Because you will close your trade uh, faster. Okay, here we have
Faster here.
here we have 1 minute, 2 minutes, 3 minutes, 4 minutes, 5 minutes, 6 minutes. About 20 minutes, I was closing the old trades and make a good money to my pocket. Okay, so after digging to the midnight, taking the buy side, price consolidate. Okay, what happened? What is that? Okay, consolidate. Then we have what? Look at the MSS here. The MSS happened here for what? For taking this short-term low to digging to the deep discount. MSS happened here for same thing, to taking these relative equal lows. Okay, the price used
Oh,
this BDR raise to take this buy side liquidity and to dig into the midnight open price. But when price go down to it again, you will not use it because the algorithm used it. Okay, so everything here algorithm use it. Okay,
okay.
and this how the algorithm is engineering liquidity on the BDR raise. Okay. So here when price come up from here to here, it engineered liquidity below these relative equal lows. Okay, here price take it out. Then MSS happened for what here? For taking this short-term low to the fair value gap. Then MSS happened here. So many MSS in the consolidating profile. Okay. So MSS happened. The price move like that from discount to premium, from premium to discount, and MSS happened only for taking liquidity. So you must identify the liquidity that you will target before enter your trade. You can't enter based on MSS only. You need many things that I will taught to you. I will teach you all for you. Okay. Uh, you are watching how I taking my trades, but you are not understanding.
Yeah, okay.
You look and say, "Oh, okay, it's easy," but it's not easy, bro. It's not easy. Okay, it's very hard. But if you master it,
Okay.
it need time. It need back test. You must watch these things happen live. And, above your eyes or on the chart, okay,
Okay. Okay.
to master it. And you must have
All right.
experience in watching it many times, so many times, above 100 time, above 200 time. You must watch it live. Everything I am teaching about it, you must watch it live today. Watch the MSS, how it happened after taking the liquidity. The MSS that happened before taking the liquidity is not a good MSS and have low probability in your trade, and you can take a stop loss. This will give you a high win rate because you are not entering your trade from a level blindly. So you are not entering a trade. If price go to the daily fair value gap, you enter and take a sell, no, and or take a buy. You must wait for price to give you confirmations. So here, after taking sell side liquidity, digging on the 4-hour fair value gap, we have 4-hour fair value gap. I don't add everything in my chart. Uh, I like to my chart to be clear, okay? Because I'm where is it? Okay, here.
Okay.
So this is the fair value gap that I'm talking to you about it here. Okay, so we have a fair value gap. Price dig to it. Look the candles how is respecting the fair value gap and the price. But in this upward move, look at the sell side liquidity on the gold here. So price will take it, will not on my head, and price can easily use this fair value gap and close above it. So most important level that I will watch is this fair value gap. If a price close below it, what it will became, it became inversion fair value gap, and I can take trade from it. Okay, like here, look how price when close. Look how many trade it give us. Okay, here first trade, here second trade, here this is for our candle, so you can take a trades on the 1 minute and 5 minute and target the premium or discount or buy side or sell side liquidity. So here price close below it, so it became inversion. Okay, price go up, dig to it, then go down to take the sell side liquidity. After taking sell side liquidity, price go up, then go down, then go up, and This is the consolidation that we was saying in the lower time frame. And today, yesterday, price go up to the upside. Then this candle, what give us a liquidity sweep, swing high, occur here. So this candle closing below this fair value gap, it became an inversion fair value gap, and price can easily rebalance it and go up, and candle can close here and happen what is happened here. Okay, but I'm watching. This is my key level for gold to watch the price on it, and I have the sell side liquidity that engineered here. So uh, uh, this is how I am reading the price. Okay, so you must read the price in the high time uh, frame BD raise. Okay, after digging the daily favorable gap, price go down. This candle open up and go down to this fair value gap. I am watching the price on it. Okay, so this is was everything to our lesson today. So we have an MSS happened here on the 15-minute also. Price dig down to the discount, to this order block. This two candle is our order block. Then price go up to take the previous daily high and to take the dig to the daily fair value gap. So the areas that I'm watching, the 4 hour fair value gap. The 4 hour fair value gap is all from here to here. Okay, on the 15-minute, we have 1, 2, 3 fair value gaps. That is a liquidity vote. Okay, price can go down and use this order block to go up again, or can take this sell side liquidity, and I am thinking will take it. But because price in the dollar index is in consolidation phase, so I don't expect on the gold and the other assets we have a bigger order flow in the higher time frame. So as you can see, price go down, go up, then go down. So this was everything about MSS and how to identify it. The high probability one and the less probability one, everything was explained to you on this lesson. You must rewatch it many times and watch these things live and on the time. Not every MSS on the time is good, and you already now know why it's fake or why it's true. Okay,
All right.
practice
Okay.
everything taught you about, and have a good day. Okay, our next lesson I will explain you about fair value gap, and you will see the magic. Okay, be
Okay.
safe.
All right. Okay. Thank you, Red.
Goodbye.